Hi, this is Dave with Market Trading Concepts, closing out the week for June the 1st, 2012, Friday, June the 1st, 2012. I'm recording this video on Saturday, June the 2nd. This video will focus strictly on currencies. So let's start out with the thing that has really been driving the markets, in my opinion, these last couple of weeks, and that is the US dollar index. So let's take a look at the US dollar index on the weekly chart, and it's obvious that we have we've entered into some strength on the US dollar index. So, and that is translated into weakness on the euro. So we have a situation here where we were going sideways, and we talked about for a while some key levels that we would need to break in order to see some strength. Now, I thought that we would be finding a little bit of weakness in the US dollar, and we did find some weakness when we hit this resistance level that was denoted in the past from these previous highs back in this area over here. So if we just kind of scroll over, you can see that peak high. We had identified that level there as a potential resistance level, and we did come off of that level a little bit, but I think it's probably a short-term, just a short-term minor pullback, and it looks like we're going to see some upward pressure in the dollar index. The reason why I believe that is because we have this Darvis squeeze that is only 2 weeks in. And next week we'll be entering into, the third week where, you have everything intact to move higher. Now, the only concern that I have here at this point in time is you have this minor divergence here on the weekly chart, and we'll take a look at the euro in a second, but the euro is slightly overextended. So if we project this box out on a one-to-one basis, just going by eye, it looks like we're going to get, some movement somewhere in and around this area up here, around $85 or $86 in the dollar index. So that is a potential target. Another way that we could look at this is let's throw some Fibonacci's on here and look at extensions to see where potentially the dollar index could go. So we'll go from this high, this low within this Darvis box, the context of this weekly Darvis box, and you can see that we have extensions of the 1272, which we've hit, and we're just below the 1618. So these are some pretty good levels to look at. So we have potentially 8407 at the 1618, and we have 85.5 to 86 if we just kind of eyeball where this the full width of this Darvis box may go to. I think in the immediate term 8407 makes sense. The euro is quite extended, so let's take a look at the euro and see if that will give us any further guidance in terms of what we're looking at here. The dollar index, before we move on to the euro, let's just take a look at the daily chart. And you can see the daily chart has entered into a nice trending situation. So, as most other markets, any pullbacks, any decent pullbacks, it looks like the 8-period exponential moving average has been holding, but a pullback to the 21-period exponential moving average and around these price peaks and where it touches the 21 EMA, somewhere in there, would be a logical structural pullback within the context of an uptrend that could be bought on the first test, because as you can see, we haven't really had a test of the 21-period moving average in a while. I personally think that the euro is a little bit extended, but that can happen in extreme market situations, and you'll see what I mean when we jump over there. But I wouldn't, you've got this key reversal. Here at this high, which would denote a potential pullback in the dollar index. And, the logical place for it to pull back would be around this 81.50 level, 81. 60 level, which would coincide with this peak and that 21 period moving average. So potential pullback is in the cards, but I think the bigger, larger path of least resistance in the dollar index is to the high side, so I wouldn't fight that. Now let's take a look at the euro, and you can see here we've had for 3 weeks we've had a Darvis squeeze to the downside. We've been talking about this for many weeks, and I'm just going to expand the chart here for the weekly of the euro. We talked about this key $1.30 level. If we broke the key $1.30 level, then what we were looking at was a move down to the $26.44 level. Now, we did get that move. This is what I would consider a momentum trade, a momentum market. We were bouncing around in this range for a long time, and we were looking for guidance outside of this range. So you can see here, just above the $1.30, we've been talking about that. We've already hit this target. The first target that we were looking at was $1.2644, I believe, if memory serves me, $1.2644. That was a retest of these levels here. Yeah, there it is. I'm sorry. $1.2644, and that was a retest of these levels. Now, when the Darvis squeeze fired, it gave us a target of $1.25-ish. So we're looking at this $1.25-ish level here, and normally you would expect some support in and around that level. And actually, if I were short this market, I'd probably close it out there because I'd be expecting at least a bounce off of that level. Now, we had another week last week of weakness, which was actually quite surprising, but in extreme market situations, this can happen. So normally I'd be looking for support at the full width of this target. When it's reached, I'd be looking for a bounce. We didn't get that last week, but we are fairly extended. And, looking at the dollar index, unless we really continue on with like an extreme news-driven type of market situation, we could get some continuation of downside. But that being said, if I were short the euro, I would definitely tighten up my stops, and I would definitely be cautious on the downside for any unexpected snapback rallies. So what I mean by that is, like, we've been momentum for a long time here. If I was in the profit on a euro trade, I wouldn't want one of these situations, a fast snapback, to come back and take my profits. So I'd want to definitely trail my profits down and let the market take me out of that position if it decides to reverse, so that I lock in some profits. I hope that makes sense. Let's take a look at the daily chart and see if that gives us any guidance. This was a really good move short in the euro in terms of a trading move. Not good for the euro, but that said, I think we're pretty extended. So let's take a look at the daily chart. The daily chart is in a downtrend. It looks like this trend may persist. We haven't even had a test of the 21 period moving average. So as we were saying on the dollar index, you can see on the dollar index on the daily chart, if you recall, we had a key reversal down, and now we have a key reversal up here signal. This is this signal here. Let me just change this to green. No, actually red is fine. We're in a downtrend. So what we were saying is a logical pullback to the 21 period moving average after a momentum type move, which is what we've experienced here. This trending move is basically a momentum type of move. So I would expect the market to maybe go from momentum mode into reversion to the mean mode at some point in time. So this is something we'll be talking about at an upcoming meetup, but we have a meetup coming up tomorrow on Sunday. We won't be covering this topic, but we probably will be covering it in one of the next two meetups. And basically the concept goes like this. We've been momentum for a while. Now we have a potential reversal signal. If you look at the opposite side of this on the dollar index, it looks like we might get a pullback to the 21 period moving average in an uptrend. Well, now we're in a downtrend on the euro, which is the exact opposite of the US dollar index. So this would be the US dollar index. This is the euro here. So what I would expect to have happen is at some point for it to come up and retrace back into resistance. So we haven't touched the 21 exponential period moving average and since this move began. I mean, we had one pullback here to the 8-period exponential moving average, and it was rejected. So what I'd be looking at this point in time, I'm not really looking for a lot more downside, but I would be looking for a retracement back into logical structural resistance. And what I mean by that is a move from momentum, which we've been having, reversion back to the mean, and then the mean in this example is the 21 EMA, and I'd be looking, long story short, to expect a retracement into the 21 exponential moving average where a fresh short entry might be taken. So let me just recap that in case it wasn't clear. What I'm looking at this point in time is the first retracement back to the 21 exponential moving average. I'd be looking at somewhere in that zone, looking for a bounce off of that level or retracement off of that level. So a short somewhere in there and looking for a pullback. Now if the trend reverses, then what you'd be looking at is a bounce off of that level, a pullback, a higher low put in, and then a push higher. So in between where the retracement would take place and where a potential higher low would take place, you have enough room, or you should have enough room in there in order to get in the position, trail your profit down, and if it comes back and takes you out, at least you've trailed in a profit. So that's how I would manage a trade like that. But what I would actually be expecting is the first test of the 21 period moving average to do one of these and continue lower and break that low. That's what I would be expecting to have happen, but I would manage it as though it may put in a higher low in the interim, just to make sure you don't turn a potentially profitable trade into a losing trade. I hope that makes sense. So then the breakdance fight between the euro and the dollar index, and really the downward movement in the euro, the upward movement in the dollar, the US dollar index, is really, in my opinion, what has been driving all markets. It's been driving the move in commodities lower. It's been driving basically everything, in my opinion. And on that basis, I think those are important markets to watch to get a gauge for maybe where things may be going and where they may be potentially reversing. Now, if, let's say, the government, the US government, whoever comes out and they decide to institute a program of QE3, I think that we could see, I'm sure they're watching these markets, and I think we have to be on alert and on guard for a potential reversal that would take place as a result of that. So any kind of announcement of QE3, I'd be looking to probably get out of any short or any current positions, expecting some type of a market reversal, at least in the short term. QE3 would push assets higher, in my opinion, and I would be, on that kind of announcement, I would probably look to just flatten out my positions and reevaluate with the expectation that a potential reversal might take place. So that said, let's have a look at the Aussie dollar quickly. I don't think it's really that important at this point in time to look at other currencies. It looks like it's in a downtrend because I think the US dollar and the euro are really driving everything. This market it looks like it's down. Potential signs of accumulation there in this bar here, but I mean, I'm not really looking for any other major setups in the other currencies. The British pound had an initial long signal. The market structure has completely changed after this long signal weeks ago, and you can see the 8 and 21 is crossed over on the weekly chart. On the daily chart, it is in a pretty pronounced downtrend, so I think that any retracements back up to the 21 exponential moving average are shorting opportunities. That would be the first test. The first test is usually the most high probability test, so I would feel fairly comfortable with a trade like that, a first test back into the 21 period moving average, shorting on that retracement. The Canadian dollar Canadian dollar looks much the same. They all look very overextended, so I don't think I'd want to get short any of these currencies at their current levels, but maybe a first test of the 21-period exponential moving average would make sense for a fresh short opportunity. But I'd be selective on these. I'd be selective on these currencies because they all look like they're in lockstep with each other. So you have to be kind of choosy. Let's take a look at the Japanese yen. We've been talking about the Japanese yen and how initially we wanted to get short these moves, but we were looking for signs of rolling over in order to do that, because it seemed like we had a good down move, and you would expect a retracement inside somewhere in this zone here on the weekly chart after a big down move like that. But as you can see, the Japanese yen is kind of in a world of its own, and you can see that for whatever reason, and whatever that reason is, I don't know, and I don't even really have a hypothesis on, we are now above the 61.8% retracement on the weekly chart in the Japanese yen. I would not want to be a net shorter of the Japanese yen. I would probably want to focus on the long side at this point in time, because the market structure, the underlying market structure from this downtrend and a possible rejection of this level here in continuation has totally changed and reversed, and we're above these key levels here, and that structure has changed, so you can in my opinion, no longer be looking at the short side. In fact, here, if you look at the daily chart, you had a continuation long setup in terms of the Darvas squeeze fired off to the long side at $1.2664. It's already hit its target over 200 ticks higher, actually, or around 200 ticks higher at the $1.2853 level and above. So you can see that the tail on the top end of this, what looks like a doji candle on the day, has probed above that target. So this is more a continuation long setup. You can see here that we've been on the daily chart in an uptrend, and we were talking about it doesn't make sense to short this market unless the structure changes, unless the price rolls over, breaks this trend line, the moving averages roll over to the downside. So we really didn't have, structurally speaking, or from a setup perspective, any real reason to get long the long the Japanese yen, even though we were looking at possible short side entries based on the weekly chart on the Japanese yen. The daily chart really didn't give us any entry opportunities. In fact, it gave us signals to the contrary and gave us a heads up that the market was going to go higher with this Darvas squeeze to the long side. Already hit the target within 2 days. This is what you would expect from a momentum type of setup, which the Darvas squeeze is, where you break out of this consolidation and you hit the targets relatively quickly. So that's all I have today on the currencies. I didn't cover the Swiss franc. Not even sure if I have it here on my chart. I don't have it here on my chart, but I may add it for the future and cover the Swiss franc as well. But those are some of the major currency pairs. And in summary, I think it's really the euro. It's important to keep an eye on the euro and the US dollar index. That's really, in my opinion, what is driving all markets. So I hope that helps. Any questions, please feel free to contact me and let me know. Have a great week.